Hello.
Right now, 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 right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. Shall we start here on the daily? Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. Well, what's happening? It's been increasing over the last 50 years since the government has been Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your weekdaily morning show where we bring you the latest in Bitcoin, cryptocurrency, and global technical, fundamental, and on-chain analysis. And in today's episode, is the bottom in? That is the ultimate question. The second question is, when is Jebb going to get a haircut? I really don't know, but I'm hoping at some point relatively soon, because I know I'm really starting to look like Alfalfa and a Peacock had a child. And the timing would line up too, based on how old that movie is. Anyway, we're going to be talking about Bitcoin. Is the bottom in? Have we seen the absolute capitulation of Bitcoin yet? Or are we going to see another one? Are we going to see the beginning? Well, we've already seen the beginning of a small rally. We're sitting at 17,400. But are we going to see the continuation and the development of that rally following tomorrow's news that CPI is going to come back lower than where it currently stands at 7.1? We've talked extensively about CPI on this channel. I've brought you quite a lot of information pertaining to why CPI is where it is and what drives CPI and why CPI drives the Fed funds rate and why the funds rate drives Bitcoin. So what's going to happen tomorrow when we see that development that CPI is going to come down? I'm predicting between 0.4 and 0.6%, probably somewhere around 0.5 is most likely in my opinion. So I would not be at all surprised at a 6.6 print instead of a 7.1, which we saw for November of 2022. We're also going to be talking about FTX. As you guys know, FTX had an $8.9 billion hole in their balance sheet. Today, we have found out that they have recovered nearly $5 billion in assets. That is more than we thought, but it still leaves nearly a $5 billion hole, or nearly a $4 billion hole in the books that's going to have to be made up somehow, or if it doesn't get made up, well, then creditors are just going to be up a creek. Unfortunately, for anyone who had money on FTX. We're also going to be talking about a couple of other stories. We're going to give you some updates on the Cameron Winklevoss, Barry Silbert conflict and the declaration of war that was levied yesterday. Everybody's getting ready to lawyer up. This is getting really interesting. Unfortunately, it's not the kind of interesting that you really want to watch, though. It's more like you're driving down the highway and there's a car accident, so you kind of can't help but look. That's the kind of interesting we're talking about, because this is, make no mistake, not a good thing for crypto to find out that DCG, Genesis, and Grayscale have been involved in a very strange trade to cause Grayscale's Bitcoin Trust to garner up, to just consume hundreds of thousands of Bitcoin. They're sitting on 650,000 Bitcoin. And now, if they go bankrupt, all of that's going to get dumped on the market to cover the bankruptcy filings. We would very much like to not have another major empire in crypto go bankrupt, but we're going to have to keep a very close eye on that one. Let's go ahead and take a look at chat here. Oh my was first. Said, good morning, fam. Hashtag FinSolve. We've also got Jeremy Shorter in chat, said, woo, let's go. Let's go. Really appreciate you all for tuning in. Crypto Ben Franklin in chat said, good morning, everyone. Good morning, Crypto Ben Franklin and everyone else. We got JoJo in chat. Good morning to JoJo. We got Justin Eubanks in chat. Said, good morning at Crypto Jebb. Queen said, where is your hat? My hat is sitting outside on the conference table where I was putting the stream together. So don't have the hat right next to me right now, but tell me if you like the hat. If you don't know, go back and watch the last two videos that have gone up on the channel, and tell me, what did you think about the hat? I really like the hat. I think it Works pretty well. The hat, and now I just need some cowboy boots. I got some hiking boots. My wife got me some more hiking boots for Christmas also, because my last ones were starting to look like they had a mouth. You know, when you step on them and the sole's falling off. Oh, man, it was terrible. I needed new shoes, so Sarah got me some new shoes. Thank you very much for that. Crypto Mini Bike in chat. That made me laugh when you mentioned Peacock. No, you don't look like one. I don't? Okay. Well, I was kind of hoping I would. When People's in chat again, of course. Let's see. Who else here? We got JoJo, Crypto Mini Bike, Crypto Smitty. What's up, Crypto Smitty? Got the Coin Father. Matanya Holmes. I haven't seen your name in a little while. Love you, Jebb. I tune in daily. Have opened a long-term long. There you go. All right. What's going on with office hours? I really do apologize for missing office hours yesterday, guys. We were dealing with something. So I'll give you a brief update, and then we will go into it more a little bit later. We're going to be going to Shan's a little bit later. I'm not going to tell you when, but at some point, because nobody's really taking us seriously, and this isn't getting any better. Luckily, we have a lot of people, including many of you guys, praying for Sarah that the baby wouldn't come too early. Her symptoms are basically like she's been in labor for 8 days, and some of the doctors keep saying it's Braxton Hicks. This is not Braxton Hicks. She's basically in active labor, and so we're going to go in and get like a fourth opinion and see if somebody can give us some help. Hopefully get an ultrasound, make sure everything's okay and kosher with the baby. She's kicking a lot, so that's wonderful. Nevertheless, we don't really know what exactly is going on, but we're praying and hoping that something will be found out. It is the grace of God that our daughter hasn't come yet, and I firmly believe that is a miracle. And so thank you, Lord. I will say it on stream in front of all these souls. Thank you, Lord, for keeping our daughter in the womb for as long as you have. And we just pray, God, that you would help her to stay in the womb for another 12 weeks until she is at term, because we are at 26 weeks tomorrow. Anyway, back to the show. Crypto Mini Bike said, I like the hat. Usually here on the replay. Got to join you live. Quinn Ed said, thank you. Moosey Moose said, Jebb, do you think the bottom is in? Well, that's what we're going to talk about today. So if you guys enjoyed today's stream, I want you to do a couple things. First and foremost, smash the like button. Let's see if we can't get the likes up to, let's say, 250 in the next 20 minutes. And then also, let's go ahead and share the stream. Is there anybody that you know that might find this stream helpful? And also, one final thing, tell me in chat, whose show would you like to see me go on? I want to start trying to go on some other shows. I love going around the blockchain again, a few different places. I'd like to try and go on Yahoo Finance or any of those places if they would have me. So tell me, where would you like to see me go and try and make an appearance? Because I would love to get out there and share some of the things that I've learned, if that's something that you guys would be interested in. All right, let's go ahead and jump onto Twitter. Normally we start on CoinMarketCap, but today we're going to start on Twitter. Cameron Winklevoss penned an open letter to the board of directors at DCG Co. and made some very strong allegations, essentially that there's accounting fraud going on, that Barry Silbert knew it was happening. In fact, he was the one that perpetrated it. DCG Co. responded, and if you want to see the full breakdown of this open letter, I went through the entire thing on yesterday's stream, pausing to explain what all of it meant. If these allegations are true, and it seems like it's going to go before a jury and a court to find out if it's true, if these allegations are true, it is fraud, and it is a huge problem, and DCG could go bankrupt, and Barry Silbert could go to prison. We don't know whether or not that'll happen. We live in a land that's innocent until proven guilty. But again, if this stuff is true, it's very serious. DCG says this, and this is probably Barry Silbert penning this behind the DCG like official Twitter. This is another desperate and unconstructive publicity stunt from @Cameron to deflect blame from himself and Gemini, who are solely responsible for operating Gemini Earn and marketing the program to its customers. We are preserving all legal remedies in response to these malicious, fake, and defamatory attacks. Essentially, they're saying, we will countersue you if you keep saying this stuff publicly to Cameron. DCG will continue to engage in productive dialogue with Genesis and its creditors with the goal of arriving at a solution that works for all parties. So, I just want to read a few of the responses here and then this one as well. Suz says, the solution is that you pay back all the money. It wasn't yours. You were the custodian. It is sickening what you were doing to people. That's a really good point, and that would definitely be the first point. This is Gemini's money. It's Gemini's $900 million that is not being paid back to them by digital currency group's very own Genesis. They owe them $900 million, but there's a massive hole in their accounting because of some very strange accounting practices that they were going through themselves. Here's another one. You are all to blame in this. Gemini to choose the shortest path to yield products. That's fair. A lot of people made a lot of money very quickly and not through the best and most how should we say, sustainable methods, and DCG for messing with the way you manage your yield offering. Better due diligences, less trust, and people's money would have been safe. Then here's another one. This is my favorite. Matthew Hyland, you may know him. He said, you lost money, you're admitting guilt here. This is the most bizarre response ever. You're basically saying you ran a shady business, so it's Cameron's fault for trusting your business. And that's pretty much what it looks like. They're basically saying, you lended us money, so you're the one that's responsible for it not working out. You see how that works? Like, let's say a bank said that to you. You deposited money in our bank, and we lost it because we weren't following standard accounting practices, and we were trying to make money very quickly. It's your fault for using our service. How dare you use our service? You're the one to blame. Wow. And just to clarify why I say that that's kind of what they're saying here, this is another desperate and unconstructive publicity stunt from @Cameron to deflect blame from himself and Gemini, who are solely responsible for operating Gemini Earn and marketing program to its customers. Of course they operated that service. They used your product. It wasn't Gemini Earn that went down. It was the $900 million loan that they gave to Genesis so that they could generate a yield and then give it back to Cameron and Tyler Winklevoss's Gemini Earn program. So basically they're saying they're deflecting blame from themselves and Gemini, who are solely responsible for operating Gemini Earn and marketing the program to its customers. So it's their fault for running a program and then lending them money. You know what? I'll give you that. Fair. They apparently should not have done business with you. So it sounds like we all agree. It sounds like everybody who's watching, Cameron and Digital Currency Group themselves agree that Gemini Earn made a mistake by working with Digital Currency Group and Genesis. That's essentially what DCG Co. is saying here. And again, it's probably Barry Silbert, the founder and CEO, telling people what to say on this. And he's probably quaking in his boots because I have a feeling everything Cameron said is true. I don't know. Again, this is something that will almost certainly go before a court at this point, and the court can rule on what actually took place. And just so you know, if you think that that's far off, it might not be. Take a look at this. Whalechart.org responded to that. Didn't respond to it. Somebody linked this tweet to that tweet thread saying, breaking, multiple parties working with the EDNY and SEC's investigation of Digital Currency Group and Genesis. The focus is accounting fraud. If you don't remember, in the article we read yesterday, one of the biggest allegations here is, drumroll please, accounting fraud to the tune of $1.1 billion being categorized as a current asset when it's a 10-year promissory note. Where in the world would Cameron get the information or the idea to make that up when that's something that can so easily be fact-checked? And by the way, if it's not true, then all DCG has to do is post some of the statements. All they got to do is post it on Twitter. And by the way, if they lie, the SEC is going to file charges on that. So if they do post it, they better well be telling the truth. But if they really do mean what they say, if it really is set up the way that Barry Silbert and DCG wants to make it out to be, then prove it. I understand it's the person that's making the accusation is the one that has to bring the evidence. I'm not saying that the defense is the one that has to prove themselves innocent. It is innocent until proven guilty. I'm not in any way trying to put the impetus on DCG to defend themselves. It is up to Cameron Winklevoss to make the allegation. But in the court of public opinion, which is where Cameron has taken this by posting this on Twitter, DCG could very easily clear any bit of doubt and make Cameron out to look like an idiot if they are telling the truth, by simply posting proof that the promissory note was not labeled as a current asset, and by posting proof that pretty much everything Cameron said did not happen. Again, they don't have to do that. It's an innocent until proven guilty world, and that's the way it should be. It's not world, but country, and that's the way it should be. But to get the public back on their side, that would definitely help, because people are not the biggest fans of DCG right now. So, not going to spend the whole stream on DCG. Did just want to give you a brief update on that. Let's go ahead and read chat here for just a second. DCG is gaslighting, lol. That's exactly what it sounds like to me. Grand Roofing Incorporated in chat. What's up, man? Poor twins, always getting screwed, either by Mark Zuckerberg or these folks. Yeah, I mean, kind of. The thing is that they, the thing is that they're still billionaires. So, like, yeah, they are kind of getting screwed, but ultimately, they're still doing all right. A lot of people telling me where they'd like to see me. Maybe on Paul Barron. I've had Paul Barron on the show before. Liked him. Data Dash, yes, I need to get that rescheduled. We were supposed to have, definitely around the blockchain. I'd love to go back on ATB. Data Dash and I were supposed to have a collaboration, and kind of fell through. It was a scheduling issue. It wasn't his fault. It's totally on me. By the way, Nicholas Merton is like the nicest dude that you'll ever meet. I haven't spoken to him much, but from how much I've spoken to Nick Merton over at Data Dash, he is like the most kind, friendly person that I think I've met in crypto. So just a giant shout out to Data Dash and Nicholas Merton, the man behind Data Dash. Would definitely love to have a collaboration with him. Where is Do Kwon? I don't know. I'm sorry. I had to. I had to. Wendy O. Yep, I had Wendy O on the channel a little while ago. Wouldn't mind going on her YouTube channel. Replace Kevin O'Leary on Shark Tank. I don't think I want to go on Shark Tank. I don't think I'm enough of a jerk to be a shark on Shark Tank, to be honest with you. Like, everybody's just mean on that show. I don't want to be like that. Good morning, everybody. The Classic IT guy said, I have the Beholder said, smash the likes. All right. The reason I posted this poll is because I want to bring this topic up. Is the Bitcoin bottom in? 42% of you said yes. 58% of you said no. Interesting. I actually expected a little bit more optimism. However, I think that you guys are leaning in the right direction. Let's take a look at the chart. Bitcoin right now is trading at $17,400 in change. It has now broken bullish, slightly bullish, above the ascending triangle pattern that we've been talking about for the last couple of days. There's a few problems with this. First and foremost, we broke bullish here and did nothing with the momentum. We were in the ascending triangle pattern. That ascending triangle pattern should have, at the very least, rallied us up to $17,600. I would actually be more inclined to use this bottom, and then it could have rallied us up to $17,800. If you went all the way back to this bottom, then you could argue that it should bring us up to $18,200. You might be getting a little ahead of yourself. I'd probably put it right here in the middle and then say we should be going to $17,900. Unfortunately, that's not what happened. Bitcoin broke to the upside and has traded sideways ever since. I think there's a lot of pent-up, how should we say, questions about what the market's going to do post-CPI data drop. If I just bring up bls.gov/CPI, you can see CPI, Consumer Price Index, currently sitting at 7.1%. We're going to see it drop again. An update on January 12th. That is tomorrow at 8:30 a.m. Eastern Standard Time. So less than 24 hours from now, we're going to have that update. If we just kind of drill in here, go into the read more, you can see where all of these are broken down from. This is actually not what I'm looking for. There's a way that you can look at the entire breakdown of everything. Somebody could remind me. I thought that you could go right here. Anyway, there's a way that you can go into the charts here, and it'll break down everything. I thought if you hit read more and then you drilled in, it would show you everything, but it doesn't seem to want to. Aha, it will here. Let's see if I go to this. Okay, so anyway, chart's not working very well. We need bls.gov/CPI to give us a little bit better data. I'm probably just forgetting how to use it, but nevertheless, you can see this here is broken down by region. Okay, so anyway, what I was saying is that it's sitting at 7.1% right now. If you give yourself a little bit, if you zoom in here a little bit, there's a way to do it. I don't want to spend a bunch of time trying to remember how to do it, but there's a way that you can do it here on this website where it'll break down every single category. There's about 50 of them, and you can look at the net change on every single different aspect. So you look at cars, you look at clothing, you look at food at home, you look at food away from home, you look at rent, you look at housing prices, you look at oil, natural gas, you look at fuel oil, all these different categories that CPI tracks, and what you're going to find is that some of them are extremely high, and they're bringing the market massively to the upside. And even here where you can only see 4 categories, and in fact, one of them is just an extrapolation of the others 3, you can see energy here is making up the vast majority of the inflation. In fact, just looking at energy services here, electricity is up 13.7% year over year. Natural gas piped up 15.5%. Even in the United States, one of the largest producers of natural gas, especially since the shale revolution in the entire world. In fact, I think we are the largest single producer. We're not the largest exporter. At least we weren't before the Russia-Ukrainian conflict. We might be now. But we have some of the largest natural gas reserves and some of the largest natural gas industries, petrochemical industries in the entire world, and we're still up 15.5%. Think about how the rest of the world's doing. Oh no. So here you look at energy services, natural gas, and then it's going to take you back to the top. Go here, energy commodities, fuel oil up 65%. This one right here is a big contributor. Gasoline, all types, is sitting up massive. It is sitting, has rallied 10.1%. That used to be like, I want to say 70%, but because we've had higher gas prices for so long now that it's going to end up falling off because it's been over a year. Fuel oil, on the other hand, and that being more so of the, diesel fuels, that being the jet fuels, that being the marine fuels, I believe is what it's talking about here. Those other fuel oils other than gasoline, basically that seems to be all the fuel oils other than gasoline itself. Those are up tremendously. And a big part of the reason that they're up so much is because we've had such a massive dearth in the global oil supply chain. So is the bottom end. We're going to talk about that in a second. But as always, we're going to start from the macro and we're going to zoom into the crypto. There's a big problem coming. The problem is Russia has a ton of its drilling going on in the Siberian permafrost. Why would that be the problem? I'll explain. Russia exports several million barrels of oil a day, and that oil is largely piped from Siberia through the Trans-Siberian pipelines back towards the east, where it's distributed in the eastern Russia. So it's distributed into the Black Sea through their ports down there near the Caucasus. It's distributed through St. Petersburg, and I think there's a port up there. And then there's also a lot of ports that are being built to the tune of $100 billion in investment in the frozen north. The problem is when the oil stops flowing and it sits in the pipes and it's 25 degrees below freezing, it freezes. The pipes freeze solid, and you have to rebuild the entire pipeline. You also have to re-drill the entire well, because if the pipelines stop flowing and they stop sucking the oil up from the ground and they stop moving, the oil turns into a sludge, into something almost plasticky in consistency, and then it freezes. And then it doesn't quite freeze, but it almost freezes. And you can't ever get it flowing again. It's almost like pouring 1,000 gallons of bacon grease down your drain. You just got to kind of destroy the whole house and repipe the whole thing. Except now you got to do that on a national scale in the world's largest country by land area. All the while, Russia's economy is in the worst shape that has been in probably since 1937. Good luck with that. It took 30 years to do that, to fix that the last time that happened, because this same thing occurred right after the collapse of the Soviet Union. There was not infrastructure in place to ensure the oil kept flowing in 1992 after the fall of the Soviet Union, and they took 30 years to rebuild all of that oil and gas infrastructure. It just now came back online, and it could go right back offline again, and it would take 30 years for it all to be rebuilt. And also, about 2 million barrels of the oil that's drilled in Siberia was drilled by British Petroleum. It wasn't drilled by Russian companies, which means since BP left at the beginning of the war, they don't really have the ability or the technical expertise to continue operating those wells. So we don't know how long that's going to last. The point is, Russia is probably going to continue selling oil even at the $60 price cap that NATO and the West imposed upon it, even though it'll be losing money just to keep the wells open and not freezing, just so the oil keeps getting out of their country. But none of the maritime insurance policies want to do business with Russia anymore. And to sail in a maritime environment, especially through the Bosphorus Strait, which is how you get out from the Black Sea, which is where the heads of many of those, not the heads, that's where the distribution annex of many of those pipelines come to, is in the Black Sea. And then the tankers go through the Bosphorus Strait and the Dardanelles in Turkey and down towards Greece. To go through those straits and to also go through all the NATO waters over by Norway, North Sea area, you need to have a maritime insurance policy. Nobody wants to do business with them anymore. So they're going to try and build their own maritime insurance policy industry and maybe work with China and India. But the second that something takes place, they don't have the infrastructure to be able to. The second that a ship needs to actually lean in on one of those maritime indemnification policies, and they don't have the ability to do it, nobody's going to take that insurance anymore, and they're going to consider it moot. And then the cargo ships that are taking oil out of Russia can't move anymore, and then the pipes freeze. And this is not just a winter problem, because remember, those pipes are in permafrost. So it doesn't matter if it's the middle of July, it'll still freeze. Russia's in a world of trouble. And the reason that's a problem is because Russia is one of the biggest oil and gas exporters. And right now, one of the things that's driving oil prices down globally is that they're still exporting oil. They're just exporting it under this $60 a barrel price cap. So it's actually helping with inflation and hurting Russia, the inflation of the oil market. The problem is that if Russia goes offline as an oil and gas exporter, which they very well could in the next 12 months, you end up leaving about a 15% hole in global oil supplies. All of a sudden, unless you have national protection, isolationary and protectionist policies, so that we're not able to export oil to other nations, the free market's going to continue exporting oil to other markets that'll pay a premium for it because they will buy it for 20% higher than the Americans will, and then you end up sending oil and gas prices up around the world and also in the United States, because the United States will probably step in to make a ton of money and fill that hole that Russia leaves after Russia's entire oil and gas industry implodes upon itself. It's not guaranteed that'll happen, but it's more than likely at this point that that'll happen in the next 12 months. You're talking about a complete and total collapse of the global petrochemical industry, and the United States being the largest producer of natural gas and oil, both, not the largest exporter necessarily, but the largest producer. We will end up stepping in to fill the gap and sell our oil to other people, and that's going to lead to even more inflation in the United States, more than likely. All of that hinges on whether or not Russia implodes upon itself from a petrochemical standpoint, but it very well could. Why do I bring all that up? Well, that's just one facet of how screwed up the world is right now and why inflation is so bad. If we look at fuel oil here, it's up 65.7%. Gasoline still up 10.1%. That's a lot. That's not as much as it was, but that's still a very large amount of inflation. That is higher than headline inflation. That is still one of the areas of inflation that is dragging it up, not down. Fuel oil. Again, this is all the other energy commodities. These come from almost every single input into this number comes from oil or natural gas. That entire industry is just now recovering from February 24th when the war started last year, and it will barely be stabilizing by the time we have another shock to it. So CPI is going to come down for right now, is what it seems. But it's a very unstable drop. It's a very unstable drop in the CPI levels. And again, I want to talk about whether or not the bottom is in for Bitcoin, but first we got to understand the broader perspective on things. This all items category is being pulled down by a number of things, but it's not being pulled down by food and energy. It's being pulled down by all items less food and energy, which is currently sitting at 6.0%. If we zoom in here, you can see services less than energy services sitting at 6.8%. That's pretty high, but it's not as high as the other actual energy services. So this is services such as, for example, shelter, medical, and transportation services. Transportation services naturally is much higher because, well, to move a bus, you need to put gas in it, and gas is expensive. Coming over here to the commodities, less food and energy, you're looking at all of these other areas. Used cars and trucks, if you've noticed, they've actually gotten a little cheaper. New vehicles are relatively high, but that makes sense because do you have any idea how much plastic goes into a new Camry? A lot. Do you have any idea how much steel goes into a new Tacoma? A lot. Both of those industries are in shock right now. The oil industry we just talked about. The steel industry, which is what you build the chassis of a vehicle out of, and aluminum, depending on the car, but both of those industries are up a creek right now. One of the largest pig iron producers in the entire world was Ukraine. The area that was producing all of that is now being under constant mortar fire. So that industry is not doing very well. Steel is another one that is in a lot of trouble right now. And that is one of the big four major commodities that you need to run a modern civilization. You need steel, you need, well, iron, but we'll call it steel. You need iron. Let's call it iron, actually, because that's actually what it is. You need iron, you need coal, you need oil, and you need food. And, of course, natural gas is in there, too, but that'd probably be fifth on the list. Both of those go into new cars. It's surprising, frankly, with how much disruption there is in the global semiconductor industry, the oil industry, and the steel industry, that new cars right now are only being measured at 7.2%. And frankly, I'm not quite sure I buy it. Alcoholic beverages up 5.5%. That's not necessarily a bad thing. Tobacco and smoking products up 6.3%. I wouldn't necessarily say that's a bad thing either, but it is definitely contributing to inflation. Medical care, commodities, and apparel up 3.6% and 3.1% respectively. We're going to see what changes here over the next few days. And tomorrow when this data releases, I'm expecting that you're probably going to see new vehicles sit right around where it is. That might drop some. But the thing that I'm really expecting the most change on is going to be this fuel oil category. That's been dropping a lot. That was sitting at 130% 6 months ago. Now it's sitting at 65. I think that is going to go down a little bit because the United States has become much more protection, has a lot more protective of its oil and gas industry. And we are selling to Europe. And also the other thing is that we've got a balmy winter going on in Europe. It's not as cold as it normally is, which is a godsend and probably is literally a miracle. Because otherwise, Europe would be freezing its butt off right now. They're very lucky that this is a pretty balmy winter, and Russia's not very lucky because it is very cold in Russia right now, as it always is. But Russia doesn't have to worry about it as much because they're the ones producing all the food and the energy. Keep in mind, guys, Russia is a net exporter of energy and food even during the wartime. They are creating a ton of both of these resources, and these are two of the main things you need to drive a modern economy. That's why Russia is able to put up as much of a fight as it is. Okay, let's go to full screen for a second and break this down. CPI is an incredibly complicated number. There's a lot that goes into it. That might be why CPI is looked at so often, because it is a conglomerate of many different metrics, most of them having to do with prices of commodities. And it gives us an idea of how powerful the dollar is for the purposes of buying things, and it gives us perspective on how volatile and inflationary the global economy is. CPI is the largest driver of the Fed's decisions. Remember, it's not just January 12th that you need to look out for. You also need to look out for February 1st. That's when the Fed releases their rate hike. People are expecting it's going to be 0.25 basis points. I'd be a little bit surprised if it's only 0.25 basis points. Maybe they'd take it to 0.25 and then they just keep raising it at 0.25. I'm not really sure on that, but I'd be surprised if they plateaued here. Let me put it that way. I could actually see them doing 0.25, but I'd be a little bit surprised to see if they plateaued, and this is the last time they raise rates. CPI impacts the Fed rate. The Fed rate impacts Bitcoin. Both of these numbers are, in theory anyway, moving in a more bullish direction for Bitcoin, and so is the Dixie. That's why we need to ask ourselves the question, is the bottom in? Let's check the poll. Is the Bitcoin bottom in? 58% of you guys still say no. 42% of you say yes. Here's the reason that's even a question. So we've just provided some of the background for this. Again, here's the reason this is even a question. First and foremost, Fed is likely to bring in a 0.25 interest rate hike. Because I want to take back what I said earlier. I can actually see them doing 0.25. I'd be a little bit surprised if they stopped at just 0.25 and raise it to 4.75. I could actually see them continuing on at a 0.25% rate hike every 45 days for the duration of this year, up until maybe 7%, or at least until the CPI comes down to meet it. So maybe you take it to 5.25, 5.5, maybe 5.25. Let's call it that. At that point, you would probably have the CPI come down to meet the interest rate, which is normally where they start coming down together. So that's a bullish thing in theory for the crypto market, because people generally get excited when the Fed stops hiking rates. They generally get excited when the market is going through a consolidation event and the Fed is calming down and you're getting into a cheaper debt environment. Remember, what's one of the big things going on right now with all these companies? They can't get any money. They're all insolvent. They don't have any money. You know why? Because they were borrowing it on cheap debt. That cheap debt's gone. It's gone. So the fact that the Fed's been raising rates like this is actually, in a way, a good thing, because it's blown up the parts of the crypto industry that don't work. It's weeded out the weak actors. And I'm very excited to tell you that the crypto industry should be, if we take advantage of the opportunity, far more healthy moving into the next 10 years, because I'm hoping that we'll learn some of the lessons from building the cryptocurrency industry the same way you built the tech industry in the 2000s and 2010s, because by the time we got to the point where the tech industry, by the time we got to this point in cryptocurrency, the macroeconomic and geopolitical forces that allowed for the tech industry to explode into $10 trillion valuation territory is over. Globalization has ended. It's done in the way that we know it. We're still more globalized now than we were 200 years ago, don't get me wrong, but we're more reverting back to pre-World War II, Great Depression territory type of environment. I'm not saying we're going to go into a Great Depression. What I'm saying is that we're going into more regional powers. We're going into less global trade. We're going into more regional independence over commodities. That's what we're going into. You don't build the internet you don't build not the internet. You can't build the internet in that area. You don't build the modern tech environment in that world. You don't do it. And that's what crypto was trying to do. Crypto was trying to build based on the old paradigm of hire 10,000 employees, take out $5 billion in debt, pay it back over the course of 20 years on an interest-only loan, and then print money. World doesn't work that way anymore. You don't have cheap debt anymore. You don't have territorial waters that are open and free anymore. You don't have a China that can produce the different manufactured goods that you need to run your industry cheaply anymore. You don't have the global stability and the cultural unity anymore. You think that we had cultural unity as far as in the 2000s? No, we didn't. We had a lot of disunity, and that's actually one of the things that drove the development of social media, because people would get on social media and argue with each other. Now, a lot of people are actually still, in a way, it almost harkens back to the Soviet Union. Everybody's got one common enemy, and it's Russia and China. We've got, ever since the fall of the Soviet Union, the West has not had a common enemy. Now we do. It's Russia. I guess it's always Russia, right? It's always the boogeyman, Russia. Anyway, I'm rambling a little bit here. The point is, the world is a lot more unstable than it used to be. However, the numbers that go into Bitcoin's price, the CPI, the effective federal funds rate, GDP, and CPI are all starting to look better. We're going to have more information on what CPI looks like tomorrow. Again, I'm expecting a 0.5% drop. A lot of that, I think, is going to come from fuel oil dropping, as the United States petrochemical industry has now had almost 12 months to retool itself in a more nationalistic, isolationist focus. And we're also going to see a drop more than likely in... I don't know if we'd see a drop in pipe natural gas, actually, since it's winter. I think the fuel oil is going to be the main one that's going to cause that drop. And also food. We didn't look too much at food. Food at home is probably going to start dropping a little bit. We're looking at dairy and cereals sitting very high right now. You're probably going to see some of the at-home food categories. I'll show you really quickly. Cereals and bakery products, dairy and related products, non-alcoholic beverages and beverage materials, other foods at home. A lot of these high categories right here, you're probably going to see these drop a little bit because much of the increase in these metrics has taken place 12 months ago, and that trailing data is going to fall off. That's not to say that these things are getting cheaper, but the rate of their appreciation in price is starting to slow down. So I think those two are, because that's one of the things that is going to either set us up or not set us up for the rally. Before we do, let's make sure we stay hydrated. This is Coffee and Crypto Live. Drinking a Gatorade now. I am now officially off of coffee, though, by the way. What I did is I kind of weaned myself off it a little bit by drinking like 8 ounces of Dr. Pepper every day. It had like 30 milligrams of caffeine, so I was able to just kind of wean myself off of it. Now I have just a little bit of caffeinated soda every once in a while just to get myself off of it. But pretty excited about being off of coffee. Again, I don't have a problem with coffee. I don't have a problem with caffeine. I don't think there's anything inherently wrong with it. I just didn't like being dependent on it, and I actually feel much more... I feel just as sharp mentally, but more in control of my... not in control. I'm in control, but more clear, I suppose, without it. So there you go. Again, do not forget to stay hydrated. Very important thing. All right, I'm going to close this tab really quickly, and then we're going to read chat for just a second, and we're going to jump onto the chart, because, of course, we can understand the geopolitical as much as we want, but we also have to understand the chart. Forgive me here, guys. My computer is not wanting to play nice. There we go. Proud of you, Jebb. Natural-born athlete here. You're a natural-born athlete. There you go. Good deal. Trueflation has the year-over-year rate at 5.73, which is a nice drop from previous highs. I give food scraps to my neighbor and get 18 eggs for $2. That's a pretty cool... All right. Nice. What, do you, like, feed it to their chickens or something? Or they have a dog? Robert chickens are $2.50 a chick. Build a coop. That's a good idea, actually. Sarah, you want to get some chickens? She said sure. All right. $2.50 a chick. You can get a chick for $2. Wow, that's awesome. Also, Carvana and CarMax could go bankrupt and flood market with used cars and drive those prices down more. That's a really good point. I haven't talked to you guys about Carvana. Carvana is almost certainly going to go bankrupt. Let's see. Let us see. Same show. Now you just have to bring your own coffee. I know. I walked away from coffee. I'm still going to drink it every once in a while. I still love the taste of coffee. I love a coffee every once in a while, but I'm just not going to be dependent on it every day. All right, let's go ahead and jump onto the chart. Right now, Bitcoin is trading at 17,355. If you remember to the beginning of this stream, I said that it wasn't very encouraging that Bitcoin was only managing to trade sideways after breaking its resistance at 17,350. Excuse me. Stay hydrated, but swallow correctly. Anyway, we managed to get above that level, but we didn't manage to stay up there very long. Right now, what we're doing is we're attempting a back test of that level. The question is going to come down to whether or not we can hold this. I'm not the most enthusiastic about this movement right now because, frankly, Bitcoin had the potential to go through a major rally moving up to CPI data, but I think everybody's just kind of sitting on their hands waiting to see whether or not CPI is going to end up being bullish or not. We don't seem to have the strength and the momentum necessary to actually push through this zone of resistance because, remember, it's not just this area right here. That line right there, it actually does go a little bit higher. You can see that's the peak right there of that previous level. And then also we have a peak right here that we could look at. So really, in truth, Bitcoin is trying to get through a zone right here, and it doesn't look like it's able to find the strength to do it. Again, if CPI comes in a very bullish area tomorrow, then it is possible that Bitcoin will push through this zone. But right now, Bitcoin is having a very hard time getting through here. Let's look at Lux Algo here. By the way, guys, if you don't have Lux Algo, I would definitely recommend you getting it. If you remember to yesterday's stream, I'll be brief on this because I talked about it yesterday. We talked about how there are really only 5 real signals that you need to pay attention to on Lux Algo over the last 3 months. You can weed out every single other one that is not circled from here to here. And the reason I went over it yesterday, essentially, none of these signals were confirmed or looked very promising in the first place. What that tells us is that this is the 3rd serious buy signal that we've seen in a time. The question comes down to whether or not we can give it a few more confirmations, because we want to see more confirmations than this. We can't just see a buy signal right here and assume, okay, the bottom's in, Bitcoin's going to rally, Bitcoin's going to moonshot. Great, let's do it. We need to see more. We need to see Bitcoin breaking more levels of support. We need to see Bitcoin doing things such as holding this flat level of support, such as holding this uptrending level of support, such as staying up here above 60 in the RSI window. We need to see it, not having a bearish MACD cross, which we could potentially see relatively soon. That would not be good for things. And the other thing is, we would like to see it not drop down to the discount here. Just look at this. We managed to rally up here into the premium. We actually hit all the way to the top of it, and the equilibrium didn't reset up here. Why is that? Well, I can't tell you exactly from the coding perspective because it is an artificial intelligence that is behind the algorithm here. But it does seem to me a little bit interesting that the equilibrium did not reset up here on Lux Algo price action concepts yesterday when we managed to break up here into the premium territory. The equilibrium didn't jump up here. It's a little bit interesting. I'm kind of surprised that it didn't do that, and I'd definitely like to see that happen. So keep that in mind. I guess what I'm saying here is that Bitcoin has gone through a rally, but it's done nothing so far to prove to us that it's something that we can really have some confidence in. That's not to say that it won't. It's just to say that it hasn't yet. That's not to say that it never will. That's to say that I will wait for the proof on it. I want to see Bitcoin hold this level of support. I want to see Bitcoin hold this uptrending level of support. I want to see Bitcoin hold above the trend catcher. But right now, Bitcoin is giving me reason to doubt that that's going to take place. We could have seen a much more enthusiastic rally here. Maybe not seeing a more enthusiastic rally was a good thing. Maybe it would have been a bad thing for Bitcoin just a moonshot and then have a big correction and then start acting like something it's not. Maybe this is the healthiest thing for Bitcoin to do, to have a gradual stair-step ladder up and then consolidate and then continue laddering up. That is probably the more healthy thing to do. But I'm going to be honest, I'm not the most confident in where this market is right now. I want to see Bitcoin at least stay above one of these levels of support over the next 3 days. And moving into the CPI print, I'd like to see some bullishness, because one thing that could happen from the CPI print is you could very well see Bitcoin you could very well see CPI have a bullish print and then Bitcoin drop because it didn't have the effect that people expected it to. You could see the CPI to drop at 6.6. People expect that that's going to go through a moonshot. 15 minutes later, Bitcoin isn't in a massive pump, so everybody shorts it because they were looking for that bullish story to cause the market to move to the upside, and you see Bitcoin drop down to $17,000. You would likely see a drop to $17,000 confirmed if you fell below the trend catcher and this uptrending level of support, sitting here at $17,250. So if you're in a position to do a short trade, that's a possible short trade. If If you're in a position to do a long trade, breaking above 17,530 is a level where you could potentially go into a long trade if you're extremely bullish. If I were a trader, I probably wouldn't take that one, though, because I don't have a lot of confidence that Bitcoin's bull market is resuming. I don't have a lot of confidence that the rally's coming back. However, maybe I'm playing into the hand of this. And this is where the title of today's stream comes in. This is the Wall Street Cheat Sheet, Psychology of a Market Cycle. You've seen this before if you've been in crypto for more than 3 seconds. It's a very common chart, and it gives us essentially the paradigm of how the market goes through through rallies and corrections. And this typically is talking about a stock, but in this case, I also think that it's in many cases it's also very relevant to the cryptocurrency industry. We've seen the hope, we've seen the optimism, we've seen the belief, we've seen the thrill, we've seen the euphoria, we've seen the complacency, we've seen the anxiety. Now we'll start getting into naming this. Anxiety, Luna. Denial, we hit $20,000, we dropped to $18,500. Panic, we stayed down here and dropped down there a second time. Capitulation and anger, FTX implodes upon itself. Depression, it's been 2 months. Why are we not rallying again? The market's dead. What comes next? If I'm properly plotting all of those events on this chart, then that means that disbelief would be next, where people say that this is a sucker's rally. And you can even see here in this chart, normally, and this is, I think, a fair representation of the way it works. Normally, you're going to see a much more gradual rally to the upside, moving into the disbelief. You see that happening in the history of the market. You see that happening in 2018 when the market is bottoming out and moving into 2019. You see this disbelief rally with the market rallying and moving to the upside just a little bit here, just a tiny little bit. This is what kicked it all off. We're talking about Bitcoin just moving 23% to the upside in 15 days. That doesn't sound like much. It is a lot. Then you see Bitcoin move up a little bit more here, and then we broke the local high, and I can almost guarantee you that if you bring up Lux Algo here, it's going to call that a change of character. Let's just see if I'm right on that. Almost certainly right here is a chalk. Let's see. I'm just very curious to see whether or not that's going to be the truth. It's going to take a second to load. Oh, it doesn't want to load on it doesn't want to load on BLX. Let's see. Let's go back here. I'm just curious if that actually does print as a chalk. And I need to go back to technical analysis school. It's not a chalk. It's oh wait, I'm in the wrong spot. Never mind. It is. It was a chalk. You can see right there. Boom. Called it. Chalk plus. There you go. Bitcoin rallied to the upside. And then out of nowhere, we saw another major movement. And then people started to get what? Well, let's go back to it. They started getting hope and optimism. Market went through a big rally. Then we corrected. Then we had almost like this little mini bear market cycle before we went into the big rally all the way up to $65,000. Then you go back to the previous bear market also back in 2015, and you see something similar. You see the market goes through a tiny little rally, and then zoom, it takes off. Why? Because all of the FUD from FTX going bankrupt disappeared. All of the FUD about China banning Bitcoin started to disappear as well, and people started saying, okay, maybe the market can go through a rally. Maybe this thing isn't dead. Maybe there is money to be made here. And enough people jumped in that the market ended up going on its bull market. It took some time. Largely traded sideways for this time. Remember, in the next bull market in 2019, we saw Bitcoin basically do this, but it essentially followed the same pattern. We just had this first bump. And remember, if you don't know what I'm talking about, I am talking about this. Plots almost perfectly. You see that? That's what I'm talking about. We had this one big jump, and then we fell, and then we rallied, but it ended up lasting about the exact same time. It's kind of what I'm expecting to happen here. That's why I've shown you this chart here on the daily chart on BLX. I think you're going to see a gradual slow rally over the course of 2023, maybe up to at the most $30,000 to $35,000. I'd be surprised if we went much higher than that this year. Then moving into 2024, moving into the halving, then you start rallying towards all-time high towards the later part of 2024. That's where I think you're going to see the market movement. So is the bottom in? It's almost the wrong question. When is the bottom? We don't know. We don't know if the bottom's here yet or not. But what I can tell you is that there's a lot of likelihood that the macro environment, at least from the numbers, is going to get easier for Bitcoin relatively soon. And let's be real, that's the main thing that people look at if they are looking geopolitically. They're not looking into how oil and gas infrastructure works in Russia. They're looking into CPI. They're looking into the funds rate. They're looking into CPI They're looking into GDP, things like that in the United States. People generally aren't looking into the entire world order of globalization collapsing in on itself and trying to figure out how that's going to impact Bitcoin. People normally have a shorter term time horizon and a more narrow view of it than that. So if they're looking just primarily at those numbers, CPI, GDP, and the EFFR, the funds rate, then they're likely going to have a lot more exuberance in the market. The companies, on the other hand, probably aren't going to. It's probably going to take them more time to want to jump into Bitcoin and cryptocurrency because they're trying to figure out whether or not this is going to work. FTX has recovered over $5 billion in cash and liquid crypto, says report. This was published this morning on Cointelegraph. Previous reports suggested that FTX saw losses peak at nearly $9 billion in total liabilities. According to an attorney familiar with the matter, troubled cryptocurrency exchange FTX has recovered $5 billion in cash and liquid cryptocurrencies. However, the exchange is still working to rebuild transaction history, and the total amount of customer shortfall is still unclear. That is absolutely apocalyptic. You have an exchange that was worth $32 billion and had $10 billion in holdings, and they didn't even have a proper transaction history of all the transactions going on in their own company. I understand that that's millions and millions and millions of pieces of data. But when you have a team of a few thousand people and you have a few $1 billion at your disposal, that should be part of your accounting infrastructure. The fact that John J. Ray III has had to spend the last 2 months trying to figure out where the money was spent is a huge problem. Anyway, Cointelegraph previously reported that FTX had $8.8 billion in total liabilities. At the time, sources said the exchange had very little cash and liquid digital assets, amounting to an estimated $8 billion hole in its balance sheet. So, seems like they're doing better. Seems like they're finding more money. Good. Maybe my prediction that you'll get 10, maybe 15% of your money back could end up being wrong. I would love to be proven wrong on that. Sam Bankman-Fried, the disgraced founder of FTX, has pled not guilty to all criminal charges relating to the exchange's fallout. The United States Attorney's Office for the Southern District of New York has formed an FTX task force to trace and recover missing customer funds and handle investigation and prosecutions related to the exchange's collapse. So that is a exciting piece of news. We don't know the veracity and validity of that statement, but that would definitely be the hope, wouldn't it? Let's see. Yeah. So this is just an article that I was reading earlier talking about the disbelief crypto rally. Could we be in the disbelief rally? I think that it's possible. I think that the altcoins are still going to get wrecked even more than they already have. But I think the bottom could be close for Bitcoin. So as far as the bottom, is the bottom in? That's really the question. Bitcoin and disbelief rally, is the Bitcoin bottom finally in? Is the bottom in? The thing is, I can't tell you that with a lot of certainty. And the reason I can't is because I think it really depends on what happens with Cameron Winklevoss and DCG. I think it really depends on what happens with BlockFi and several other companies that are, at the moment, not in the positions that they should be. Are these companies going to go bankrupt? We shall find out. If they do, bottom's not in. If they don't, maybe the bottom's in. I would lean more in the direction of no, I'm not confident the bottom's in, though. That's where I would lean. The reason is there's not a lot of confidence in crypto right now. Everybody's back to this mantra of Bitcoin's a scam and the whole industry is a joke and then it's all going to go to zero and it's going to go negative. And I don't think that's true. I think there is good technology here. I think there is technology here that can help people. I do also, however, think that you are going to have a very hard time convincing people of that when FTX is in the middle of this quagmire. I think that takes time to rebuild that trust. And that can take years. All right. If you follow history, it's going to run to 50,000 and then dump to 10,000. Maybe. I'm not sure where it's going to get the momentum to rally to $50,000 in the next 18 months. Once they lower interest rates, it'll really kick it off. I think you're probably right. Here's one of the problems, though. It's going to get intense this summer over in Russia, over in Ukraine. The reason is, I don't know if you've noticed. Let me just run down some headlines for you. There's a lot developing on the military hardware front of things. The United States sent a nuclear submarine to Australia. They sent a bunch of Tomahawk missiles to Japan, which is the first time. It's only the second nation in the world that we've ever sent Tomahawks to. I believe the only other one is Britain. Japan is massively expanding its defense fleet, so a lot of people are very concerned that China's going to try something on Taiwan. I was just reading an article yesterday about some war games, and if Japan and the United States got involved in a Chinese-Taiwanese conflict, China would almost certainly lose, but it would also cost the lives of hundreds of thousands of people and $250 billion in military hardware, while also completely destroying what we know of modern globalization. Not to mention that, now that war game took place in 2026, so that's several years away, if that even took place. I don't think China's stupid enough to try it, or at least they shouldn't be, because they would fail. Xi Jinping, nobody can talk to him, though, and the dude's crazy, so we'll see what happens there. That could happen at any point, just so you know. If it does, that changes things. That completely throws the chessboard in the air, and we got to wait to see where the pieces land. This summer, one thing that we can be very confident in is that things are going to get crazy in Ukraine. More nuts than we've seen this entire time. And the reason is Russia is mobilizing a second round of troops right now. More than likely, that's not confirmed, but it seems like they're trying to do it. And it seems like they're trying to mobilize a ton of troops without anybody knowing about it, which would make sense because Russia has already, to this point, lost 111,000 men, not just wounded. I'm talking loss. And at the same time, Ukraine is getting all kinds of armor. In fact, they very well could be getting the Panther II tank from Germany and other European nations relatively soon if Germany ends up sending tanks their way. They're also getting Bradley fighting vehicles from the United States. They're getting AM EST RCs from France. They're getting Poland wants to send them Panthers, but they have to get authorization from Germany since Germany holds the patent and the creation rights for the Panther. Ukraine has a ton of armor going its way. And like I told you yesterday and in a lot of streams, you want Ukraine to win this war because you don't want World War III. And they're getting a lot of armor. So you're about to have a lot of dudes coming from Russia, and you're about to have a lot of armor and equipment coming from Ukraine, and it's going to be a slugfest, and it's going to suck. And if any of you guys are in Ukraine, I'm praying for you. I am really sorry that this is happening to you. It's not surprising that they attacked Ukraine, but it is a horrible thing. All right, well, we're going to wrap it out here in a minute, but I do want to first answer this question. Miguel Acosta said, "Hey, Jebb, how are you and your family?" You know, it's been a very interesting week and a half. Last Tuesday, Sarah started contracting. Wars break my heart. No one wins. Exactly. Totally agree. And shout out to Colin McDonald. What's up, man? So last Tuesday, we started contracting as if we were going to give birth. And Sarah was 24 weeks and 5 days pregnant at that point. Now we're 25 weeks and 6 days pregnant. Tomorrow will be 26 weeks. It's way too early for our daughter to come and for her to be, you know, healthy and safe. It would be very dangerous if she came right now. So that's been extremely hard on us, just being straight with you. So as soon as I get off the stream here, we're actually going to be going to labor and delivery again. This will be the second time we've gone. We've been to the OB, we've been to our own doctor's office, we've been to labor and delivery. We're going to a different hospital. We're going to hope and pray somebody takes the symptoms seriously, because it really is a miracle that our daughter hasn't come already, because Sarah basically looks like she's in labor. We don't know what to do. Nobody's taking us seriously. We're praying and trusting it to God, because ultimately this is my daughter, this is Sarah's daughter, but it's also God's daughter, and he loves her too. And so we trust that he's going to, we trust and we know that his will be done. We just pray that his will would be to protect her and to keep her safe. So yeah, that's where we are right now. I'm not going to lie to you. It's been an extremely difficult week. It's been the hardest week we've had in a long time, but we trust in the Lord Jesus Christ, and he is our Lord, and we believe that he's got a blessing. And we also know where we're going. We also know that this life is fleeting and that it's ultimately very important, but also very short. And the next life is where we're really going to be blessed. And we also understand that in this life, it's our job to look like Christ, walk like Christ, and share the gospel with as many people as possible using words and actions. And we just, it's definitely our prayer that would be what I'm doing here on the channel and what we're doing here on the channel. So thank you guys for the concern and for the prayers. It's not possible for us to have enough prayers. We definitely trust in a God who answers them and who's listening. Hope everything goes well for you, brother. Thank you very much. He never gives us more than we can handle. Respectfully, Queen, I wouldn't agree with that. He always gives us more than we can handle, because the thing is, it's not about us. It's about Christ in us. Galatians 2:20 says, "For it is not I that liveth, but Christ that liveth in me." Paul says in the beginning of Romans that that we who have no confidence in the flesh. Romans chapter 6, verse 11 says, "Likewise reckon ye also yourselves be dead indeed in sin, but alive unto God through Jesus Christ our Lord." The third chapter of Colossians says, "For ye are dead, and your life is hid with Christ in God." It's not that he never gives us more than we can handle, because it's always more than we can handle. It's that he sent his only begotten Son that he would indwell in us, and he sent the Holy Spirit to live in us as well, and that through their power, we can have everything we need pertaining to life and godliness, to quote the word. That's what it is. It's not so much that we can handle it, because we can't without him, but it's when he's in us and we're trusting and believing that he did give us everything that we need on the cross for life and godliness. That's when we can do all things through Christ who gives us strength. But it's not that we can do all things, because we can do nothing apart from him. But we can do all things through Christ who gives us strength. And I don't mean we can pick up a 7-ton boulder and throw it across the ocean. I'm saying that we can do all things spiritually through Christ who gives us strength. That's what Paul was talking about. Not to correct you, Queen. I apologize if it sounded that way. All right. Really appreciate all of you guys tuning in. Love you guys. Love you guys so much. Thank you so much for your support. It's been a real privilege being on the stream today, and I'm looking forward to, if everything goes well, seeing you guys tomorrow. Tell me in chat, do you think that you're going to see the bottom in on Bitcoin? Do you think that the market is going to go through a major rally relatively soon? I'd love to hear your thoughts on that. I do have to go, guys. We're about to head out. Really appreciate all of you for tuning in. As always, before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh!